lot, gentlemen, for joining us and explaining to us the rising input costs. For companies like Century Plyboards, the rising gas prices don't matter because they resort to biomass as fuel. But overall costs have definitely gone up, but they'll maintain their margins and they will continue with their capex plan despite these tough times. Let's do one thing. Let's get back to the markets. For now, absolutely flat. The Bank Nifty has moved into the red. There is pressure coming in from the HDFC twins as well this morning. Yet again, both those stocks are under a bit of pressure right now. But in our special segment, Quarter Se Quarter Tak, today Ekta joins in to tell us how the street will view the results from the pharma sector. What are the key expectations? Ekta, over to you.
Thanks for that. Well, for this quarter, overall growth for pharma companies is estimated at 8 to 10% for the quarter. For Q4, EBITDA is expected to be closely watched for. The recent incremental rise in input costs due to the Russia-Ukraine war, slower movement of goods due to rising COVID-19 cases in China, heightened freight costs combined with price pressure in the US are likely to impact operating costs. Hence, pressure could be seen for margins for final drug manufacturers and especially API companies. Analysts are expecting anywhere between 90 to over 250 basis points Q-on-Q pressure for companies this quarter. Now coming to growth, US, the mother market for most large pharma companies, is likely to be muted this quarter due to factors again such as price pressure. Most companies have estimated 5 to 10% price pressure in their portfolios. Currently, estimates are US markets could be flat this quarter. Domestic growth is likely to be a key driver. Axis Cap estimates a 13% growth in the domestic market. Growth in the Indian market in Q4 is expected to be led by higher demand in COVID-19 related drugs due to wave 3 and primarily growth in the acute therapies, that is medicines which are used for fever, coughs and colds. Commentary, as always, is key for pharma companies. We will watch for commentary on margins given higher input costs, US price pressure, impact of the Russia-Ukraine war, especially for Dr. Reddy's and JB Chemicals, and the status and the progress on US FDA issues faced by companies such as Lupin, Aurobindo, Cipla. Lastly, some more stock-specific points to watch out for this quarter. Sun Pharma, growth in the specialty portfolio, which includes the psoriasis drug Ilumya, to the acne drug Winlevi to drive US sales. Divi's Labs, remember last quarter growth and margins were at record highs, so whether or not they managed to sustain that this quarter, remember margins came in at around 44% in Q3. Biocon, a pickup in their biosimilar sales and the recent deal with Viatris would be watched for. Lupin, improvement in margins on a Q-on-Q basis. In Q3, they came in at an adjusted 13.7% versus expectations of 15%. Aurobindo, entry into domestic formulations and sale of the injectable portfolio. Right,
Ekta, thanks very much for that. Vishal Manchanda is now joining us, pharma analyst at Nirmal Bang Institutional Equities. Vishal, great to have you with us here. Thank you very much. I trust you heard Ekta explaining what the expectations are in detail, company by company and overall trends as well. I want to start with the overall with you, Vishal. For pharma companies, will broad-based margin decline be the common theme this quarter? There is the pricing pressure for those companies which operate in large generic markets like the US. Added to that, there is this cost surge everywhere else, not just the end product. So is that something that you're expecting as a sort of given across the board?
Yeah, good morning. So I think cost pressures is something we'll kind of see the trend continuing from Q3, and probably it might worsen a bit in Q4. But I think this would be the last quarter wherein, not the last quarter, but we should see an improving trajectory from here on. So I think from the next quarter, Q1 onwards, we'll see the companies passing on prices to their customers. But I think Q4 is when these raw material prices would probably hit them most. So this probably might be the worst quarter for the companies in terms of the margin impact. Okay. And pricing, I think the US pricing has clearly seen a decline this year, but it's more on account of temporary issues. So there has been an accumulation in inventory at the wholesaler level and even at the manufacturer level. So companies have been kind of liquidating inventories before it expires. So that's creating a transient pressure on prices in the US. But overall, if you look at the US pricing, I think it's bottomed out because it can't go further low, because if it goes further lower, we might see the Indian companies also incurring losses.
Okay, Vishal, good morning. Let's talk about the two large caps at different ends. Dr. Reddy's, which is clearly having a lot of trouble, and Sun Pharma, which has been one of the strongest ones. Your thoughts on both these?
So Sun has kind of created a business which is now kind of not impacted by pricing pressure. So their specialty business is a very high value business wherein pricing pressures do not really impact them. So they have taken care of this. Winlevi, Ilumya, Sequa are doing well on a QoQ basis, especially Winlevi, which they have launched in the last quarter, their anti-acne drug. That has done extremely well. So Sun, I think, can potentially surprise. They would also take a one-time provision on account of a litigation they settled with Ranbaxy. So that might come as a one-off. But I think the business should look good. It should probably be one of the best performers for Q4. Sun Pharma. Reddy's, I think on Reddy's it should be more of a flattish on a QoQ basis. Nothing has changed notably for Reddy's. The US should look flattish. India should have the normal trajectory, high single digit to low teens trajectory, India business. The Russia business might see a 10% impact or less because the currency depreciation in the midst was very steep, but at the end of the quarter, the currency almost settled at pre-COVID levels. So the Russia impact should not be significant for Reddy's.
Okay.
So I see a more of a flattish quarter for Reddy's on a QoQ basis.
All right, got that. I think the standout feature this time, and what Ekta was also talking about, is the growth in the domestic business. So the expectation is there would be about a 13 to 15% growth in the domestic market. And a large part of it would come because of COVID-19 related drugs, right? Whether it was medicine for fever, cough, colds, etc. Who could be the biggest beneficiaries of that this quarter?
So my sense is Cipla should benefit from the COVID-related sales this quarter. So they had this antibodies which they had licensed from Roche, which were used extensively in the third wave. While I think the older drugs in COVID like Remdesivir are no longer used, and the hospitalization rate was also lower this time around in the third wave. So I think we'll not see Remdesivir catching up this time around, but the basic drugs like the painkillers, paracetamols. So if you look at paracetamol, the larger player is an unlisted player in that category. Globally, Granules India is one player which has a large exposure to paracetamol. But Cipla is the one which will be a net beneficiary on COVID account.
Okay, we will leave it at that. Thanks a lot for giving us a quick explainer on what to expect from the pharmaceutical space this quarter. Results